You know, of course I was like, oh man, I'm up $400 almost in, you know, a couple of days. I got a 60-day contract. Holy shit, you know, it's going, it's going.
Correct.
But of course it doesn't. It almost never does that.
No, all right. So like, for instance, I think when we bought ASO, that was back in, it was in March. I
Yes,
remember
March.
that, right? And it was before this exponential upswing. I
Yes.
remember ASO going up that high.
About $1.09, I think, something like that is when I caught it also.
The contract was $1.09?
Something like that, Jermaine. Yeah, because it went up. I'm telling you, I was up like $300-400 in those couple of days. You know, I ended up stepping out of it because it was just too frustrating for maybe $110 plus, which is great. You know, which is great, but I was up so much more. And I didn't realize, just sell it and then step into the position again if there's more action.
Absolutely. Especially if it's like overbought. Because when you have these stocks, especially ASO, outdoor, we know like how guns and stuff like that for the outdoor experience, because everyone wants to be outside, everyone wants to use outdoor equipment, but at the same time, once it makes a new high, it has to pull back.
It has to, yeah,
It
man.
has to, and that's what it ended up doing. Well, this is the 4 hour time frame, so every candlestick represents 4 hours. So that, like, once it made this new high and it could not go anywhere else, it just found this resistance here. That's where it pulled back, right? And it did it very heavy on this day in April. What was this, April 6th or 7th? 6th. It just pulled back heavy. So that's why, like, anytime when it starts going to being overbought on on any time frame, particularly the hour, the intraday, like the 1 minute or 2 minute, or the hour time frame, I rather just take the profits, let it pull back, and then once it pulls back and finds some type of support, then you can start thinking about re-entering in the position. Now, I'm not saying that's going to work all the time, that
Of
it'll pull
course.
back and it will pull all the way back to the 200, because sometimes, you've seen it. I sold my positions too soon, and the stock will continue to go up like another $2 or $3. That happened a couple of times on Playboy with me.
Yeah,
But
but
the biggest thing is locking in the profits, because once you lock in the profits, no one can take those away from you.
yes, and at first, when I started learning from you, and I'm, in my mind, I'm thinking, wow, Jermaine is selling too soon. You know, he's selling too soon, I'm thinking. But now I'm starting to see it your way because fine, yes, a lot of times it gets oversold. The RSI goes into the red and the stock keeps going up, and wow, more money on the table. But it turns around so fast.
Hmm.
So, I'm more of I agree with you more now than I did in, for whatever reasons I disregarded because I did, not disregarded, disagreed, whether it was just not understanding, all of those things, not understanding, not being just, yeah, not understanding what I was really thinking or getting into. Now I think I'm in full agreement with you. It's overbought. It's time to sell. You got a profit, move on.
Because we tend to, when we go into like all these social media platforms, we'll go to like Reddit and Twitter. A lot of times they'll say, "Oh, I was going to the moon." So and we all have this mentality of buy and hold, right? This is the Warren Buffett strategy, which I agree with it, but to a certain degree, because not every stock is going to go up.
But is he buying options or stocks?
It depends. Most times he's buying stocks.
Right.
Well, most times he's buying stocks with his positions.
You see,
But even with his positions that he's buying, a lot of times he's not buying like, the lower float stocks that do have that potential of running exponentially, right? That just runs like a GameStop. Not AMC is not a low float stock, but ASO is a low float stock. VUZI, PLBY, those are low floats. Dave and Buster's, PLAY, those are low float stocks that tend to run exponentially on during, during the 9:30 until about 11 or even 12:30. But towards the end of the day, they start to sell off because once they made the new high, it just tends just to come right back down. Warren Buffett is buying blue chip companies.
Yeah.
He's buying the Apples and Microsoft. So yeah, it's easier to buy and hold those. Even Apple is going to come back down, I believe. Like it's not holding its gains after it reported its earnings. But
I don't understand what's going on with Apple. You know, they report better earnings, record sales, and the market. I think just the market itself doesn't like Apple.
well, it's been doing that with every company. So
True.
every company that released earnings, except for, well, except for Qualcomm, I was calling Qualcomm since when we talked last week Sunday, and I ended up buying the options, but I didn't hold through earnings because I'm afraid of earnings.
Yeah.
I've been burned by earnings, and sometimes that's how you learn. You learn through that experience. You said, okay, well, you take a note. So I said, okay, I'm going to just sell this contract because it's not going in the direction it's going that I wanted to go. Even though it was like down $100, it was still like, oh, it's not doing what I wanted. Now, if I was patient and held it, I would have got $5 or $6 of upside because of the earnings. But because like I said, that's me, and my thoughts say, hey, you came out with good earnings, that's great, but the reaction afterwards is what you really need to focus on. So you think of Apple, you think of, I think, Microsoft, IBM, AMD, um, a lot of these big blue chip companies that came out with great, outstanding earnings that tanked, and that's been happening from this past quarter to now into this new earnings cycle. So always be on the mindset of that. Even though that they have great earnings, these blue chip companies, these companies in the Dow, even though they have great earnings, a lot of times they're still going to pull back because of whatever the market decides, right? Because and I think that happened to Tesla, that happened to Netflix, right? They all
Yeah.
pulled back.
Netflix destroyed it totally, and it tanked.
Right. See, these are all the stocks that are in the Dow, right? Um, I could say that earnings came out for the banks, and a lot of the banks, they've been doing great, right? They've been reporting good numbers, but they still pulled back. Merck was the same thing. I'm trying to think who else. Who else? Energy, I don't really play with, just because I don't know how to really read OPEC too much.
Right.
So energy is a little bit harder for me.
I stay with
Um,
you too.
but even though energy is the way that it is, we still know that oil has been, like I've been seeing petroleum companies popping up on my scanner recently, and I've been trying to figure out, well, what's that really about? Because I don't know. I think even Procter and Gamble came out with good earnings, and they still pulled back. So, but always, I think you're still on the right track where you're looking at the numbers. The fundamental analysis is always good. You always look at the fundamentals, but after the fundamentals, see where it is on the chart. Because once it starts, like for Procter and Gamble, let me move up a little bit more. Oh, did it just kick me out? Oh, there we go.
Jermaine, I'm starting to really like the pullbacks because
Yes,
I'm starting to really like the puts.
yes.
Because to me, because like when we were talking last week, I feel it's almost easier. I mean, it's truly not, but sometimes I feel like it's almost easier to catch a stock that's going to go down as opposed to catch a stock that's going to go up.
Sometimes it is, especially when you.
I feel like that, because so many things have to go right for it to go up, Jermaine.
Yeah, yes and no, because we're still in the bull market, and people and analysts are really saying that this is like the first or second year of this new bull market cycle. So, as I agree with you, it is much easier for a stock to go down. You can always identify when a stock is overbought,
Yeah.
and then you know that, okay, it's overbought now, it needs to pull back. But it's still the same. You still have to identify where that support area is, that supportive price. So once you find and identify that supportive price, then you can say, all right, well, it's definitely going down more, right? And then you can continue to take profits on the way down. But I'm with you. I feel like part of this market will be short going into the summertime, going into these warmer months, except for oil and gas, because that's when oil and gas typically go up in price. Um, you still have like the cruise lines, depending on how CDC really comes out with these requirements for the vaccines. Feel like a lot of these cruise lines like Carnival and Royal Caribbean, especially Royal Caribbean, because they had outstanding numbers last earnings report. Um, those companies, even Norwegian is still pretty good. NCLH, like those are going to be companies that we'll start to have to really think about as, more and more people are going outside and more people are trying to figure out what to do or things to get involved with. So, but I don't discredit you on looking at the downside, looking at the puts. What are these stocks going to do coming down? I'm totally with you on that.
Like Peloton. Peloton, when that poor child died from on the treadmill.
Yes.
That was about the time where I was kind of learning more about puts, but you know, not discounting the child's death. That's the most horrible thing that can happen. But I'm just saying that event or a negative event to a company, it's the market reacts quicker or reacts better, I could say, maybe even a negative news than it does on positive news, because a negative news that it'll just fall. Peloton fell, what was it, like I don't remember the exact dollar amount, or I don't even know. How about FUTU? FUTU, FUTU? It dropped
Oh
like
yes,
it dropped like $40, and that's just something that I learned, after, like, when I'm learning more and more about puts. But it dropped $40 in like a few days.
Yeah.
And
This one doesn't have a lot of liquidity behind it too. Like the price range is like $1 oftentimes. There's been many times I was like I wanted to get in around here, but I wasn't sure if it was going to continue to come down because it wasn't
But
sold yet.
you know what it is also, Jermaine? Like right there where you're pointing, the
Yes.
options at that time were, they know, like the market makers, they know. That's why they make the options really expensive. They make the spread really wide. Like you find an opportunity, like, oh, this is perfect, you got to buy. But the spread is too wide or the option is too expensive. They know, they price it accordingly.
Correct.
Because I wanted to jump in a few times on some different stocks here and there, but the spread, that's one of the first things you taught me, is that spread. And
Yeah, that spread is disastrous if you don't look at it properly. And it goes the same thing for the shares too. Like this share price for FUTU is the same as the option spread. I think the option spread was like $2 or something like that. It was something crazy. So, but you can still put yourself in a bad predicament if you're like not identifying where the support lines and stuff like that. Like I wanted, before this stock even went up like this exponentially, I was looking at it when it was near here. That's why I still have these red lines here, because that's when I was like, okay, I want to, but that spread was unbearable around $30 and $40 that I just kept on overlooking it, even though I knew it had an opportunity of going up. And that's why ASO was such a great stock, because there was a couple of things that I probably didn't mention. The very first thing is that it's an IPO. A lot of times when a stock is very new within its first year, and it's only been trading sideways for, a couple of months, it's only a matter of time before it starts to break out. That's the same thing with PLBY, PLBY, right? It's only a matter of time. It's been trading sideways that's why I keep on mentioning PLBY, because it's been trading sideways. even though it just came out in September, but it was just trading sideways for a while, for a while, for a while. And then once it starts getting some volume behind it, right? And, you know, and this is something that my mentor, Tim Sykes, showed me, right? That, you know, once you start seeing this type, and I'm trying to zoom in so you can kind of see it a little bit better. But when you see a stock that shows you something like this, right? Where, hey, it went up and it's coming back down. And then you see that first green candlestick, you're like, okay, that green candlestick engulfed the previous red candlestick. Then it showed you another green candlestick. Let's say that you didn't have these green lines, the blue lines, none of the moving average stuff. You only had the candlesticks. When you're looking at the candlesticks, then you start seeing that these are like technical breakouts, patterns that are willing to happen. So even if you would have bought on this candlestick here, you know that on the day at least, there's still another $3 of upside to test the next resistance candlestick, right? And even if we say, you know, we're being overindulgent, we're like, oh, okay, it can possibly test $21, but we're not sure. We want to see it test first. Well, it already tested here, but we see that this green candlestick already engulfed this previous red candlestick. So the chances of it really testing this candlestick depends on news and volume. Once you have news volume, that price action kicks in, then you get an exponential upside. But if you don't have the news and the volume, then it's going to be tough, right? Like, which one was it? It was Blink, like Blink. Blink has the news. Blink has the volume. But something just that goes back to what you're saying, something is keeping it down.
Yep.
And this is and that's just part of the market where you say, okay, well, what are you? Sorry.
Because you told us, right, that Blink is one of the companies that GM signed contracts with.
Correct. Correct. And I still believe it's going to go up, but there's still little things like, you know, using the technicals. I bought on the red candle day, I think. No, I bought on, I forgot which day I bought. I think it was the red candle day. Because I said, okay, well, if it has any type of upside, yeah, it was this day. That's right. Because it was red on the day, the news came out, went up exponentially higher, and then pulled all the way back down. And the only thing that I can think of why it pulled all the way back down is because the TTM squeeze was still showing these yellow histogram bars. Now, if this yellow histogram bar was closer to the midline and I wasn't just paying attention to the news, then maybe it could have went up higher to $44. But since it didn't do that and it was starting to pull back, I said, let me just cut my losses and not worry about it. And as you can tell here, that's what it kind of did. Just pulled back, engulfing this the green candlestick, taking over whatever sellers that was there on this red day, and it might come back to $32. It could. It could come back to $35. It could trade around $35, quite honestly. But something needs to give, and that's either news or earnings, which is part of the news. So as it's trading sideways, I expect it to go higher. But at the same time, you know, when you know that you have this, I read in a book, they called it the pain threshold. When you see that pain threshold is starting to kick in, you're just like, I don't want to deal with this anymore. You just cut your losses and go on and move on to the next one. And then maybe after a couple of trading days, because this might need a couple of trading days of selling before it can come up higher, then you can jump back in. And if it doesn't, and if you don't get a chance to get back in, then it's okay. There will always be another stock around. Blink is not the only one. And plus, this one had a big short interest too, which was another thing I overlooked. The short interest was damn near half the float size. It was like 50% short.
And that's on the overview pages, right? Like on TD, that it says it right there, right? The short interest, right? It says it. It's not like you got to go looking for that.
No, I tend to go on FinViz.
FinViz?
Yeah, the FinViz to look for the short interest.
And that's just the amount of stock or percentage of stock that people are that are actually shorting, right?
Yeah, that they're looking the percentage of the float, of that float size. So the float size was 41 million for Blink, right? And you say 50% of that 41 million, there's 20 million shares that are short. So let's say that you wanted to buy a put option and you're like, well, I don't know where this stock could go, but I believe it can go down. I just don't know how far. Maybe you want to take a strong interest in knowing what that short interest is, because you know that that will be something that will work with you, not against you. If that, does that make sense?
Of course. Right? Because, I mean, if I'm understanding it correctly, if there's a huge short interest, that's something to consider buying puts on, right?
Correct.
Right on.
It's what they consider a tailwind. It's behind, it's on your back, and it's pushing you in the direction that you want the price to go, which would be down for puts. So, you know, a short interest of that, I don't even know when all those shorts came in, because I bought this stock before over here, you know, before, you know, the turn of 2021, and there was not that, I don't remember that many shorts being in there. So sometimes you have to go back and look, even though you played a stock before, like this one I have, you still have to really, I need to hone in on this one, really go back through the process of, okay, well, what does the volume say? What is what does the average volume say? What is the short interest? What is the news? Are there insider? Like, really go through it all and have your 4 or 5 stocks for the day. Like, I usually have about 4 or 5 stocks before the market opens, and I'm like, these are the ones that I'm looking at. Because if one doesn't do what you thought it was going to do, then you have another one that you can go into. And if that one doesn't do it, then you have another one. So maybe 3. So, but definitely you don't have to trade, or I am not trading in and out, in and out, in and out. I know people who have 6-figure and 7-figure accounts that they don't mind doing that. I am obsessed with the market, but I'm not that obsessed where I need to trade just to trade. You trade because you see the position. It's like another thing Tim said was, you know, you trade like you're a retired trader, or you put your money in the market like you're a retired investor. Like, you're retired, you're sitting on the sidelines, you're just looking, you know, you're Michael Jordan waiting to get into the game because you know that your team is down and you want to, you know, put your money in to allow your team to win. So once you sit back and you're just kind of watching everything, especially on a pullback day, you know, Tuesdays usually pullbacks happen. Mondays usually Monday the market goes up. So if you look at it from a retired trader perspective, you don't have to force yourself to put money into the market. You can wait, look for that opportunity, and then put in. You know, don't let them news, like I got baited in with the news. I was like, GM? Oh, hell yeah. Of course Blink is going to go up. Nope. So like, that was my mistake. And I had to learn from that.
Right
on. So I know we have like a list of stocks that we talked about last week. So I'm just going to go on a couple of them. I'm not sure if anyone traded any of these last week, the ones that we mentioned, but I know we mentioned RLTR. And first off, does anyone have any questions on anything that was discussed thus far? I know some people came on in. Keisha, thank you so much. And Praza, thank you for coming on in and joining the call. But if you have any questions, please feel free to say anything.
Might be a crazy question, but are you able to put trailing stop loss on option plays, or is it strictly just for buying stocks?
Yes, you can put You can, to put it that way. So let's go so you can see. If I were to buy, well, I have options in NIO. I bought some on Friday. So if I wanted to go in and put in a put option, let me see where am I at? There we go. I just want to make sure that you are able to see the options chart. So anytime when you're here, right, and you're looking at the options chart, obviously you want to, yes, you want to put in a stop loss. So what I tend to do is that I already know what mentally, I know where I want to get out at. But I also tend to put in an order before the market opens. So I would put in an order like tomorrow. I know I would probably put in an order around $4. So how do you actually do a stop loss is what you're asking. So let me see where on here that I can find it. But I know I've seen it before, so that's why I know you can do it. I just don't know where it is on here. I think it was this. Sorry. So, yep, with stop. There it is. So you can. So when you come to the options contract, what you do is that whatever contract it is, when you right click it, you'll see where it says like, buy, sell, buy custom, sell custom, right? So when you come to the sell custom, you want to go to with stop limit. And then you'll get this whole thing that'll pop up, right? And then knowing where you want to buy, where you want to sell, obviously. So when it comes to the stop limit, well, you have your limit order. So first and foremost, you're like, where do I want it to sell at? So I said, okay, I wanted to sell at like around $4. I said about $4. I'll probably put it at 405. All right, I'm not buying. So this I would not even have on there, but I would look, let me change that to, I think I have 2 contracts. Not buying. So, and also I want to have that stop limit, right? So I'm looking for the stop limit. So I said, okay, well, if it doesn't hold this $2 area, right, and it starts breaking down $2, I say that I want my stop to be around 295, 195, maybe 195, maybe 190. Why I say 195? Because typically once it starts coming down, once it starts coming down in price from that whole dollar amount, it typically wants to test the next 90 cents or $1.85, I should say. So it want to come down to the 85-cent area, and then from 85 cents, it want to come down to 75-cent area. So typically, I like to just say it's at 195. I bought near there already, so 195 is not my stop right here. My stop would probably be more 185. And then this one, I can delete that. Whoops, I deleted the whole thing. That's not what I wanted to do. Sorry about that. Custom cells, stop limit. So with the stop limit, welcome Fritz for coming on in.
Thank you.
Like I said, I would do this, put it there. Oops. They want me to buy. I'm not buying. I say that my stop limit would be around 185 because I bought roughly about 205. So I'm willing to risk about 20 cents. And I don't know what's up with the STP. And then once I have that there, then all I have to do is just put the order in. Once the order is in, you'll see it here, right? It will pop up on the chart. That's what I like about Thinkorswim, because it shows you everything. So it will tell you where the stop limit is, where you want. Let me go into the intraday chart. All right, tell you where your stop loss is, where you, or your stop limit, I should say, and where you actually want to sell at. So if it comes down to here, which if it does, it could, maybe, I don't think so. But you know, if it does, then it will stop me out at 185. But if it doesn't and starts bouncing, I know that I already have a sell order near that 405, which is where I really wanted to sell at. So does that help you at all, Keisha?
Yes, sir. Thank you so much.
So remember, just right click the contract, and it will tell you, it will show you, is even on the buy and on the sell. Buy and the sell, it will tell you which one is which. Right, and then it will tell you the stop limit for each one. And definitely practice with that. We could probably do a practice one actually today. We could do a couple of practice, because I don't think we've gotten a chance to practice on demand as much as we wanted to from the past. Bringing it back to the main chart. And once again, like I said, we did talk about, we mentioned briefly NIO. I know in the group we talked about Ford as well. And I remember, Leon, you were looking at buying it. I think after this day, I think it was 420, you were looking at it on this day to buy, right? Because originally I was thinking it was going to come down even further because they weren't producing really good news in comparison to GM.
Mhm.
And then also it wasn't oversold. So I thought it was going to still come down some more, and it was coming below the MACD as well. So that's why I was suggesting that it looks like a put. It looks like it's going to.
Yeah, I did. I did buy the put. But the stock turned around, and I ended up, selling it for a small loss.
Yeah. So that's the thing. Like, once it does start turning around, you have to have your parameters in order. Like, okay, well, you knew that, hey, if it starts going the other direction, I need to have my stop number, my stop loss, whatever your stop loss number is, whether it's already preset or if you have a mental set and you say, this is it, that's it. Don't hold and hope. Holding and hoping is not a strategy at all. That will cause you more suffering, more headache, more body ache, more suffering, this extra suffering that you don't need at all. So just stay hard fixed to the plan. If that's the plan, that's the plan. Stay with the plan. But I know that was one. Do you have any questions about Ford at all?
Me? No, thank you.
Okay, because I know EVs, Volkswagen and stuff like that, they're all GM, they're all making a competitive push in line with Tesla. So it does seem like there's going to be some type of something going on in that space.
Ford also, they already said, because they had a decent earnings report, I think the last couple of days, right? Last week.
Yes.
But they already said their next quarter won't be as good because of the chip shortage.
Correct. And that's what I was pretty much expecting, because of I had no idea it was going to reverse like that, but I expected this red candlestick to be where this green candlestick is. So it surprised me that it even had some type of reversal, but you're absolutely right with the whole chip shortage. Yeah, you're absolutely right. But you can see that there's support that was clearly held here, right? And that's another thing when we're looking at these charts, is that even though, even though we see the candlesticks and we see where possible resistance is, because I drew this line, you know, thinking that the support was going to be held, and then it didn't held, and it fell down. But we see that there's clear support now, you know, for on this day and this day, right? And if we go back, we see it over here. That support is right around $11.30. And then we also see it back here before it made its reversal, and it came back down. So Ford is you know, in comparison to GM, there's a lot better sentiment behind it. They are figuring out stuff with their chips. I'm not 100% sure if they're going to get it from, like, you know, NVIDIA or Qualcomm, because Qualcomm has figured out stuff with their chips, but their GM is coming out with earnings. So this reaction to earnings is going to be pretty crucial, right? In the direction as far as automobiles are concerned. Because there's a lot of automobile makers that have been doing pretty much good movement. I think Tata, that's was it TAT? It was or it is an Indian from India stock, TTM.
That poor country.
Yeah, I know. They are suffering COVID the worst right now. But with their company, Tata, you know, I was once the turn of the year came, it was at $13 when I originally saw it, and then it ran up like $8 for in a couple of weeks, right? So even with everything that's going on in India, you know, who knows how this is going to affect this company. So it's not like this is something I would say to buy, but, you know, when you start thinking of terms on a global aspect, like how every industry is affected, that will also start to play a factor in, you know, whether or not you should invest in some of these companies or invest in any company whatsoever. Let's do a couple of others, the ones that we talked about last week. I know we talked about Teladoc as well, as far as healthcare is concerned. You know, telemedicine. After earnings, I think they also came out with positive earnings. Nope, they didn't. They got an estimate of negative 58 cents, and they actually got a negative $1.31. So, you know, they didn't do well on earnings, but, you know, I've seen it all the time. Just because they came out with negative numbers doesn't mean that the price action won't push it up. But, you know, it was just something just to review, because we know this is something that we talked about last week. You know, how earnings would definitely affect price. I think Procter & Gamble is going to do pretty well, I believe. I think it still has some chance, because I know that they are in that, not just in the cooking ware, but they're in cleaning. They're in like so many different places. So I wouldn't be surprised that Procter & Gamble does something pretty well. What was the other ones that we looked at? We looked at AMC last week as well. We expected it to go higher, but it really never did.
Urgent care.
Hospital emergency room don't close.
Yeah, but I ain't paying them fucking $500 for a big emergency.
So I'll just mute everybody. But it's, you know, we saw this with AMC, and AMC is coming out with earnings. So this is something that, you know, I would just say just to keep on watch, just to see what happens. Still, another stock that we talked about last week was COTY, COTY, and they are still doing well, right? They've been holding this sideways price action, you know, for some time, and all it needed was just a little bit of influence. And, you know, the Kardashians are behind this right here. So anything that the Kardashians are behind typically have been getting some type of upside. So Coty, COTY, which is a beauty maker, is still showing some significant upside going into this upcoming week. And they're coming out with earnings on Thursday, the 7th, right? Or the 10th, I'm sorry. The 10th, I said the 7th. So that's next Monday. And I think RVPH, I'm not sure how that got in here, but is below the 200 SMA. And this is something else, right? That I'm starting to trying to figure out as far as trading is concerned. When the stock, like TeleDoc, when a stock is trading below the 200 SMA, the opportunity for it to jump up like this can happen. I remember, I think it was Romeo Power, where it was mentioned in the group that, hey, this, it did this, it was this candlestick. Let's zoom in just a little bit more. It was this candlestick, right? Where people was like, oh, Romeo Power, but it was below the 200 SMA price. And I know you probably won't be able to see it on the hour chart. Maybe it might, because the moving average prices change over time. But when that day happened, when it did spike, yes, it did go over the 200 SMA price, but it was also overbought. So that's why when you look at a stock that's running and it will run for the whole day, like this one ran for the whole day, but it was also overbought. So you're kind of expecting this downside to happen. And the only way that the stock would maintain its price action is if the moving averages were above the 200 SMA. Because both moving averages stayed above the 200 SMA the very next day after it spiked, then yeah, it would be able to test the higher prices. So that's why, when you look at the smaller time frames, especially with a stock that starts moving in the pre-market, and during the pre-market, it shows that, hey, we still have upside, and it carries that upside throughout the trading day. Look on the daily chart and see where it is in relation to the 200 SMA price, because maybe that's just a one-day move, and that's all you really need is just that one-day move, and you could take that $3 or $4 a share on that day. There's nothing wrong with that. No one says that you cannot take profits. Only unless you're working with day trades and you don't have any day trades. And that's when you have to really be conscious of how many times you're buying and selling stock. Because the day trades, I like day trades. I like the fact that, if you are below 25,000, it forces you to really analyze your positions much more. And you're not just throwing money. That's where gambling stops, right? So that's why with where is it? That's why I was saying, with that stock, you will have a price that will come back down based on its position where it is on the 200 SMA. Right. So TeleDoc could definitely come back up to the 200 SMA. I know people are looking at the low, right? And that's something that we've talked about. Once it makes a new high and the price pulls back all the way down below the 200 SMA, this is the time to start thinking, hey, maybe I buy. This is low support right here at this price, 160. Even though the earnings was bad, the earnings didn't give good numbers. But, if it was a stock that probably did give good numbers, this would be something that you say, hey, maybe I should look into this, because once it continues trading below the 200 SMA, there's a point that it might get a spike and really start testing the 200 SMA price above it. But I'm still trying to figure out that strategy in itself. So I'm not fixed on it as much, but I'm just watching as stocks do travel below the 200 SMA price. As I have a couple of stocks here that I've been watching, right? And just taking notes on. This was trading below the 200 SMA price for a while, right? And then it popped up on my scanner like right around this day. And I said, oh, it's not overbought yet. And let me zoom in a little bit so you can see it. it's not overbought yet, and the moving averages, I wasn't sure. But I also didn't look at what it did on earnings or if earnings had some type of impact on it or anything. But I do know that GALT as a low floater had some spikeability, and that's what it did. It ran up like what, from 2 to 5 in a couple of days, right? So that's what I say. It's like it's good to kind of see it from both sides. Like, okay, if you're below the 200 SMA price, what are you really doing, and where might you go? It might be a little bit more clearer for people if they saw that a stock is trading below the 200 SMA price, and then now you have this definite price that you're looking at. You're like, okay, I know that at some point or another you going to test this 200 SMA price, and because that you might do that, I'm going to watch you and then wait for an opportunity to get in, like on RMO, like with Romeo Power, right? But like I said, the strategy that's been working for me personally is when a stock is trading above the 200 SMA price, because you tend to get this exponential run, and that's what's been helpful. But I'm gonna start looking into this below the 200 SMA price just a little bit more. Does anybody have any questions so far?
I have a question, but I guess it's maybe off topic, so I should probably wait until you're done.
No, I'm here. Like, no, there's nothing off topic. We're all in the market.
Can we take a look at KKR, King Robert? I just came across it. They're like a holding company, which I kind of like and I kind of don't like, because they're blank checks. They can do whatever they want. But they just had a deal with Nestle recently. They just sold something. They bought some dog food, and when on the yearly chart, the line just goes up.
Yeah, and it's overbought. Tomorrow they come out with earnings pre-market. So depending on which, I would think what we've seen thus far in the market, I would think that the price gets pulled back, like, especially that it's overbought. But at the same time, I don't know, because I would have to wait for the earnings to come out to really get a clearer idea on this picture. This overbought picture is too much for me. It's kind of like when ARK Investment, when they were up, right? And they were just going exponentially. And I just kept on saying there has to be something to pull it back. Something needs to pull it back. And then it did. It finally did. I think I kept on saying that like around this day. And then it came back and I was like, oh, okay, not yet, I guess. And then it went up higher. But once it made that new high, what did it do? It pulled all the way back down. We can blame it all on, tech. Like that was a tech crash. But something needed to pull back tech. And that'll be a common theme when you see that stocks that you're looking at, or at least in that sector or in that industry, that everything is overbought, then you just start anticipating that something needs to pull it back. You just don't know what. You just have to wait on the news, whatever the news says, because I can't predict any of this stuff. I just try to respond accordingly. So like ARK Investment, that looks like, part of the whole Wyckoff method. It came down to the 200 SMA after having that exponential run. And then I was just trading sideways. So this is like a part of phase one, that accumulation phase before it has any upside. All right. So that upside will be from that 120 to 159. So that's like $40 of upside. So, so with KKR, I kind of would expect it to pull back after earnings, but earnings is earnings. So if someone says, we're fantastic and we're about to buy Petco, right? Because they're a holding company, like you said. We're about to buy Petco and about to put them out of business, and we have all of their stuff. Who is to say that they don't go to like $80 or $100 the next day? You know, but it really depends on their earnings. And it seems like they trade pretty decent in volume: 200, 2 million, 3 million, 4 million, 3 million, 2 million. So that's good volume. Good. This has some good movement. Like, if you were in it beforehand, I've been like, oh, this ride the wave. But now it's all-time high. I would expect it to come to $53 to that 20 SMA price. At least, bare minimum. If it comes back to that price, earnings are good, then maybe it's not overbought, and then maybe you can, ride the wave up. But right now it seems like you're buying, if someone were to buy, look like it'd be buying at the top. How do you feel about that?
I just came across it like just maybe within the hour, just looking at some other stuff. I just came across that. I didn't know what to think about it other than it keeps going. But you brought up really great points that it's at an all-time high. We got earnings coming out. So probably not a good time to pick up shares.
Wait till pre-market.
Right.
See what they say. And if they definitely say something good, you start looking to, oh, okay, well, this is good. Like, I should probably get in. Maybe pre-market, it pulls back all the way to this $53 price, right? On the 200 SMA. I don't know. But when I look at, this is the hour chart so I can tell you, right? But the MACD is suggesting that the momentum is declining. But it looks like it's a little curl right here. So it looks like, going into Monday, there might be something positive behind it. But also when I look at the TTM Squeeze, showing that there's some red dots here, and I would love for these histograms to get a little bit smaller and yellow, so it can turn this into something. So it can turn the zero line into like blue, not blue, green, and then turn the histograms into cyan and blue. But where it is right now, that's kind of tough to say, what the market might do with it on Monday. Looks like it wants to push it. Like, I think it wants to push it down, but the market could say otherwise when the market opens. And they give out dividends, so that's pretty good too. Dividends are always good. 13-cent dividends, that's not bad. Is there anything else that anyone's looking at as far as stocks are concerned? Go ahead, please.
I'm sorry, was someone going to say something?
No.
Go ahead, anybody.
All right. So I came across these two stocks. They run inverse of one another. They're both gold. I think I'm not sure what they're not. It's not a stock, I should say. I think they're a type of like a fund. JDST, John David Sam Tom.
Yes.
And then JNUG.
Yes.
John Nancy Umbrella Great. So they run opposite of one another. So I have not touched any of them. I'm just trying to, figure them out, I guess, or something. But this is a long time frame, so it looks very steady. But when you zoom in, it's choppy. But they do the opposite. What one does that day, the other one's doing the complete opposite.
So yeah, it looks. Yeah, you're right.
Well, that's not something I figured out. That's how I came across it. That you know, they're both gold funds, and they for whatever reasons, the way they're designed, they run opposite of one another.
Not sure. JNUG is a bullish one. Yeah, it's a bullish one. So I'm not sure. I'm not sure why they run.
I think, Jermaine, it's just the way they're designed. They're inverse, you know.
Um,
Hello.
yes, Fitz, go ahead.
Yes, I think maybe just like how we say when TNX go up, the QQQ go down.
Right on.
So that's just how it is. Like, you know, whenever you see technology go up, stocks go down. When stocks go up, technology go down. So sometimes that's just how it is. I think
You know, yeah, one is a bear index and one is a bull index.
bullish index, yeah, that's just how it is.
Yeah.
You're the one who asked about why we don't choose shorting, like buying puts, yes, last week.
Yeah, I'm the one that just learned on puts, and I like them a lot.
Okay. So if you have a watch list, as we suggested a few weeks ago, that you need to have the VIX, VIX, you need to have the SQQQ and the TNX. Whenever you see the TNX go up, it doesn't matter where the QQQ is or the SPY.
I'm
The
sorry,
market
what
is
was the
going to
last
go
one you
down.
said?
Hold on, let me just confirm.
It was TNX.
TNX.
Yeah, the
Okay.
TNX, yeah.
10-year treasury.
Yeah. You want the SQQQ, the TNX,
Did
and
you
the
say
VIX.
SQQQ or just QQQ?
SQQQ.
All right.
The TNX looks like it's ready to come up.
When the basically TNX jump, especially anywhere about like 40, 30 to 40, and it go like 30 cents, 40 cents. It doesn't matter where the QQQ is or the SPY, it's gonna come right back down. That's a good time to short.
Yeah, so if TNX, what is he saying? If the TNX starts to go up higher, which it looks like it wants to go towards the $17 area, I would not be surprised. That would be a good time to short. That's what Fitz is saying.
Yes.
Right?
As we talk about parallel movement, looks like you mentioned the gold thing there a while ago. Yes. Whenever you see those go up, you know the market is gonna go down. The same thing happened Friday. I think Thursday and Friday. When the market opened, it jumped up to about 56. And everything seems fine. And now shortly after what happened, everything went right back down.
Back down.
Yeah. So those are what run parallel with the market.
And even the VIX looks like it's
want to go up, right?
It wants to go up. It looks like.
Yeah.
Just in case anyone's wondering why are we talking about these? Because these are like indicators. Just in case you don't know, these are what Fitz is highlighting are indicators that help prepare you for the next market day. So when you look at the VIX, when you look, you're looking at the volatility index. So this is where people have like a fear of the market, or there are uncertainty, right? The higher this VIX goes, if it's above, especially if it's above 20, that means there's a lot of fear in the water, maybe even blood in the water. That means the markets are coming down. And that goes the same thing with the TNX, the 10-year treasury. 10-year treasury will say that interest rates will go up, right? So we already know that interest rates are pretty low right now. So because if they're low, people are able to, buy things on loans at a very cheaper price. But once we start seeing that the 10-year treasury is going up a lot higher, then, it puts even more fear into the market that the stock prices, or at least the stock market, will come down. The SQQQ, I rarely use that, but I know it is for short. So when people are thinking that, hey, the market is short, meaning that they want to bet against the market, this typically goes up, higher.
Yeah,
So if you see the SQQQ
going up.
higher, that means that the market is coming down, right? It's a very inverse direction, but
Right.
it's very correct what Fitz is highlighting.
Well, that's a good time to short the whenever, especially TNX. Whenever you see it jump up to anywhere within 30 cents, 35 cents, go up to 50 cents, you can short the QQQ. It's gonna come down. If the QQQ is even up like $300, it's gonna come right back down.
Just a
agree.
small change on TNX. You said a 35-cent uptick on the TNX will affect the market that much. Is that what you said?
Yes, anywhere within 30 to 50 cents up.
Wow.
Doesn't take much.
Doesn't take much.
Doesn't take much at all.
That's what happened Friday.
Yeah. Yeah. Everything started to pull back.
Yeah, I was trying to catch Twitter and Snap on their pullbacks. I took very, very, very tiny nibbles, because all I was really doing was just trying to time it right, at the end of the day.
So you got it?
It's very tiny, very, very tiny nibbles. I mean, just, like, I guess, what can we call it? Gas money nibbles? Even less than that, I'm still losing much more than I'm making overall. I want to believe that's coming to an end sooner than later, but I was able to catch, just a little bit, something just to make me happy, just to, sell it in the green.
Okay.
Honestly.
Are you taking because you're highlighting on something really good. If when you enter in any position, do you write notes down, or do you do you write down your notes, like saying, okay, this is support, this is resistance, this is my entry, this is my possible exit, this is the news surrounding it, like really taking some detailed notes so that you come back? Because yes, we review some of the stocks on Sundays, right? But oftentimes your notes are going to tell you how your emotions were during the time that you did buy a stock, right?
I don't take notes, but I think because you're not the first. You tell us to do it all the time, and then I'm following a lot of the what is it, the high strike trading.
Yeah.
I'm almost considering buying their course. But they also talk about taking notes, and you talk about taking notes nonstop. So I think it's about time to start taking notes.
Absolutely. Absolutely. The notes can only make you better, because then you start to recognize what type of stuff
Pattern.
you pick, and which ones that work with you, which is the ones that don't work with you. Because once you figure that out, then you will start weeding out stocks like, oh, I don't even want to play with that one, I don't want to touch that one. You get very particular. So that's why, when I started taking notes, like really detailed notes, I started to realize what type of stocks are really in my wheelhouse versus the ones I'm just chasing and holding and hoping for upside. And yeah, sometimes you're going to lose, right? But if you are winning at least 70% of your trades, right, and your losses are much smaller than your wins, then over time you're definitely going to end the year positive. But you have to keep that in perspective. No one wins all the time.
Yeah, I know that. I know
No
that.
one wins all the time. There will be a fool to tell you that, and then you'll probably be even bigger fool to believe them.
Sure.
Right? Like that's why I will always mention my losses more than I'll mention my wins. Because yeah, my wins are great. I get it. But you learn more through the losses because you're like, oh yeah, I probably shouldn't have done that. Maybe I should wait until earnings come out before, I buy this stock. Or, with like Qualcomm, I had to write down in my notebook, like, and I write down. I write down my notes. Like, I felt this way. I didn't like it. I thought everything always pulls back after they release earnings, so that's why I sold. Come back to it. Shouldn't have sold. The sentiment was behind Qualcomm, so it's like those little things, right? That you will hear people like Ray Dalio talk about when they take effective notes. And if you ever get a chance to read his book, what's the name of that book? It was on his alpha trading strategy. I forgot the name of the book. The principles. If you read that book, you will start to get a wider sense of how to hold on, well, not hold on, but to think about the market in its grander text. Because like what we said from the very beginning, there's so many different moving parts that even someone like Ray Dalio, who's multi-million, who had hedge funds and all this other stuff, he even talks about losing. In the early 80s, he said he almost lost everything. And then he had to go back to the drawing board and figure out how to make himself better. So I'm gonna try to say, don't be discouraged. It's,
I'm not trying to be discouraged. I'm battling through it. I'm battling through it. As long as my account keeps allowing me to battle through it, I'm gonna keep battling through. But I'm learning. With the losses, I'm learning quicker. Because I'm forced to recognize and forced to really understand what the hell I'm doing. And it's when the things that I've been doing wrong. Some of them are really obvious, because, and I cut those out big time. If I'm going to do some educated, some real thinking and planning and taking notes and checking all the right indicators. And if I lose that way, fine. I'm okay with losing that way, but I'll probably make more times than lose, if I make the right moves before getting into a trade. It's kind of what we spoke about before everyone jumped on. I was definitely trading too much. Gotcha. Too many moves during a day, during a week, way too many. If they were all hitting, then I'm a golden child, but that's not what happened, So I definitely have been trading way too much. So I'm going to cut that out and focus on, really recognizing why I'm putting my money into a position.
Absolutely. Your hard-earned money, right?
Yeah,
money that you've made, and you're like, all right, I'm gonna put it in something that I feel like has some upside. Yeah, you have to really think, why are you putting in money, the money that you earn into the market? Like, what is the reason? That always has to be like that precursor question before you hit send. And when you hit send to place that order, does this make sense? Okay, I guess it does make sense. All right, I'll put my money in it. No, it doesn't. I'm gonna leave it alone because this doesn't.
I got to leave a lot more of these things alone instead of just trying to time it or catch a move here and there. I mean, it's a lot of the times when I try to time it, it'll go green, but then I don't know when to sell, and then it turns around very quickly, and then it's like, oh man, all right, let's just cut the losses quick and move on. And I've been cutting a lot of losses, because if I do time it right and I see it green, I just really need to sell. I don't care if it's, you know, a couple of dollars, 20, 40, $50. You know, we're talking about 30, 40 seconds, you know, or 2 minutes where this happens, you know. I just got to sell it.
Mm.
Or really what I need to do is stay away from those. Trying to time it, those time situations. I really just need to stay away from those, I think.
So if I should say something, is that some stock is just for the moment, and some you can marry them. So
Right.
you have to also know the difference.
Right on. Yeah, I definitely have a lot to learn. You know?
Yeah. So if you buy a stock and jump up $50,
Says the person who's married.
yeah, and you jump up $50, you know, and you see you're profitable, and you take it if you can, you know, if you want. You see, at the end of the day, it doesn't matter how much it go up after you come out. As long as you come out with a profit, you're fine.
Yeah.
It's painful sometimes to sell it early and see it go up another $100 or another dollar, another $2. It's painful, but at the end, you still end up profitable.
That's really the mentality that I need to.
Yes. So I bought them too. You see, whatever experience you guys as new traders have, we have been through all of that already. Are we experiencing daily sometime?
Mm-hmm.
You watch it go up and you're there waiting, and it come right back down and then end up in the negative. So you have to be able to choose the difference between the one you want to keep, or let us make it much nicer, the one you want to marry, or the one you just want to see for a short time.
Right on. Thank you for that.
You're welcome.
Yeah,
So we can actually try it. What were you about to say? I'm sorry.
Oh, I don't know. I was just gonna say thank you for letting me get this out. You know, the other thing I caught last week, I think I put it in our chat. So if you look at an option, whether it's a call or a put, and you go outside of the money, you know, they get much cheaper, right? Or yeah, they tend to get cheaper, I believe, right, when they're outside of the money. So sometimes I was coming across some of these stocks where they were, you know, a nickel, 4 cents, or a nickel. And I understand, you know, I understand that it might almost be like a sucker's bet, you know, like a parlay or something, you know, when you bet. So what I was doing or tried to do, you know, if I see a stock that's going to go up or down, and it doesn't have to do a crazy run, but if I buy, you know, that contract that's out of the money, not so much out of the money, but it just enough out of the money where it's 4 cents or 5 cents. I was buying 3, 4 of them, you know, like $20 worth. And then, you know, some of them hit, some of them didn't, but I sold the losers. I stepped out really quick, but some of them that went into the green, I sold, you know. So if I put $20 in, I made 15 really, really quick. And I know that's not some kind of a long-term strategy. That was more like gambling, really. Like, you know, I was willing to put down, you know, a $20 bet or a $10 bet just to try to double it, you know, or make a little bit more than double, you know. I thought that was interesting. I don't know. What do you guys think? Is that like just a sucker's move, or you're laughing, right? I see these $4 contracts. I'm like, what? I mean, not $4. I'm saying 4 cent, 5 cent contracts. You know, I'm like, I can risk $10, you know, $12, see where it goes, makes a couple of dollars in the green, sell it.
Well, there is a scalper's strategy on all of these where scalpers will take 20 cents, 30 cents. But as you know, if you're trying to like not trade as often, then that's going to be hard.
Right.
Right.
Right on.
It's going to be very, very hard to sustain that every day.
Right on.
Right. And even, you know, some of the most successful traders, they will tell you that they probably trade maybe 3 or 4 times out of the week. Like they're not trading in and out like 20 times in a day. There are some that do, but there are a lot that don't. If you ever get a chance to check out a guy named Jack Kellogg.
Jack Kellogg. Why does that sound so familiar?
Because he is a very recent millionaire trader. That's like with Tim Sykes and everybody else. And that was one of the big things that he was saying, that he was over trading every time. He was like, "Oh, I was just over trading, you know, coming into the market, didn't really have a strategy, didn't really have a game plan." And then once he started writing down his game plan and starting to understand, like, you know, what really works for him, then it got better for him. Like some people like the short, some people like to go long, some people like the overnight swing trades. Some people like the gap and crap, right, where it gaps up and then it, after it gaps up when the market opens, it comes straight back down, right? So there's so many different strategies that you have to kind of like, okay, what really works for me, especially in your own time of day, right? Because you know, from 9:30 to 4 p.m., I'm not expecting you to be in front of your computer, right? The only thing I anticipate you doing is to use some of the simple strategies that we discussed to help guide you in selecting or choosing a proper stock. Because without that, then you're just going up to the market just to swing at anything and hopefully that you hit a home run.
Yeah, gambling.
Very much so.
That's just straight up gambling. Yeah.
So that's the one thing I don't want to happen. That's happened to me when I first started. When I first was like getting some interest in the stock market, it was like around 2016. And I was, once 2016 came and I was just like, I don't know what I'm doing. And I was finishing up my master's program or starting my master's program. I said, I need to dedicate time to this because there's a lot more stuff in here that I do not know. And there's still a lot more stuff in there I do not know. But what I do know is having that game plan, that strategy, and practicing will definitely help. You know, having conversations like this to really kind of wrap your mind around why did I thought the price was going to go up. I bought contracts 5 cents, but why didn't the contract price even move? Because there's no volume, right? Or there's no open interest, or if there's none, then it's relatively low. So it didn't help your odds. Because all these things that whole order of operations that I laid out from before, that's not, it wasn't just something that I just like woke up and was like, haha, this is it. It was something that like over time, well, the past from 2018 until now, where I've seen people who are very successful, these are the strategies that they've used consistently. Like if they're not using the moving averages that help guide them towards the price, if they're not using the MACD or the RSI, you know, the TTM squeeze is relatively new to me, but that even changed. I say relatively new, like December.
I like the TTM squeeze. I like it.
I love it.
It does not lie.
At all. Thank you, Fitz.
Yeah, thank you, Fitz. Yes.
You know,
that thing does not lie. You know, RSI can go red and the stock could still run, but the TTM squeeze,
it's right there for you. So we're going to try this, right? Let's pick a stock. It doesn't have to be anything that you see right here, right now, but right now, what you see on the screen is February 16th of this year. And it's Twitter that's trading, right? On the on-demand section. So let's pick a stock. Let's think of a stock that we would want to trade. I know it's February. We don't know what was happening in February because that's like eons ago, even though we're just in the month of May. But is there a stock that you say, you know what, let's look at it and see if we would trade it?
I mean, for tomorrow?
Well, no, just for now. For now, it's February 16th, 10:44 a.m. And let's practice, right? So let's say that we would want, I'll put in NIO just for now. Only reason why I say that is because I have a position for it tomorrow.
I was thinking NIO too.
You were thinking NIO?
Popped in my mind. Yep.
I'm a mind reader.
I
Um,
see.
you know what I noticed too, I see a lot of money coming in on CCVI,
CCIV?
CCIV, yeah, a lot of money. Yeah, a lot of money coming in on that one, but it's for later down in the year.
So now looking at NIO, right? Because we know NIO goes up, right? Or at least we know it goes down, I should say. Right? Would you have traded this, or at least give it an eyeball, to put money into the stock? Anyone can, anyone should respond.
Are you on the day chart, right?
Yeah, this is the daily chart.
What's interesting is the consolidation right there, how it went sideways, right? So it's got to do something after that.
This
look
goes
at that.
sideways. You're
All
talking about right
sideways.
here, right?
Yeah, all sideways. So, the person that figures out where it's going from there, that's what it's all about.
All right. So what we have right now is that it's green. This is after a couple of red days. They had a green day, right? It just made a new high. Right. Pulled back below the 5. Stopped around this support area around $54. And now after it went up, after traded sideways a little bit, spiked a little bit here and here, went to go sideways. Is there anything here that suggests that maybe it could retest the $66 area? Now, mind you, it's about $5 away from the previous high.
It will have to break. It have to break the 43 here. 43.23.
It'll have to break which one?
43.
43. We see 43. What happened with 43?
No, I'm on the day chart. It's NIO, right?
Yes.
I'm saying that it would have to break the 43.
Oh no, this is back in February. We're looking at February.
Oh, you're looking at February. Okay.
Yeah. We're looking at on the on-demand section. This is to kind of help when to buy and sell, right? So when we're looking at it, we look at it from the day chart, and we're like, oh, okay, well, it's going sideways. Had a first green day. It just came back from its high, from its previous high. And then we start looking at the MACD. Well, I'm sorry, let me go back. It made its previous high, pulled back, held support. And now that it's holding support at this $55 area, we know that right now it's at $61. $61 is about $6 away from support and $3 away from the 20 SMA price. And then we also know it's about $5 roughly away from its previous high. All right, so now that we have these numbers into account, right, we see that 5, 3, and $7-ish, right? These are different areas of what our risk level is. That's how we're determining risk. Start looking at the MACD. Say, okay, well, the MACD is kind of going sideways, but the histograms on the MACD are still kind of red, and the TTM squeeze is still kind of red. Right? Is this something that you would say, you know what, maybe I should buy, or this is something I probably should leave alone?
Let me ask some. What's the difference with the on-demand and you're looking on the on-demand is the other chart that you use?
No, the on-demand replays any day of the stock.
Okay.
Yeah.
So I never used that before. I just use the straight thinkorswim.
This is beautiful.
On the paper
I
trade.
absolutely love it. All right. So as you can tell, well, first, let me go back to the 4-hour chart. So we left the daily chart. Let's go to the 4-hour chart. I like the 4-hour chart too, because it gives you an opportunity. This is another time frame that you can use. So you're not like just watching your stock every minute, right? It's a 4-hour time frame, a longer time frame. So it gives you an idea that, okay, this stock has upside or downside. This stock is green for these 4 hours versus it's red during these 4 hours. So on this 4-hour time frame, we see that it's green on this candlestick here, right? And it's still holding support here, right? We see that we start to see other supportive prices around 59.50-ish, right? Right around 59, yeah, about 50-ish. Right, so right around here it's holding. Right around here, it broke through the price here, but it was having problems here, here. So right around that 59, 50-ish area, right? You start seeing that there's a common price that the stock is being held at, or at least that was, finding a balance between the bulls and the bears. So now that we're here, we start seeing, okay, well, on the 4-hour chart, it shows that the MACD is, is coming down, it's kind of curling. The RSI is kind of curling. And TTM Squeeze is showing a yellow histogram and a green dot on the x-axis. Maybe this is a buy, right? It's not even 11 yet. 11 a.m., I should say. So then you go to the hour chart. And on the hour chart, we see that there's this red candlestick here, right? We also see that the MACD is starting to come up towards the 0 line, and the RSI, it wanted to go overbought on the 1st hour, right? It was challenging that RSI, but it pulled back during the 2nd hour, during the 10 a.m. hour. But what do we have here, right? The TTM Squeeze is looking green, and the histograms are also teal. So on this day, going to the next hour, it might be a buy. Might be, because it's still trading above the 5 EMA price on the hour chart. So now when we bring it down to the intraday time frame, which is the 2-minute, each candlestick represents 2 minutes. You start to recognize that, okay, well, where during these past 5 days, right, where was this all-time high and this all-time low? In the past 5 days, right? Nothing crazy. So in the past 5 days, the previous high was $64. It made that $64, came all the way down. Showing the low. The low is $53, right? So we already know that the low was formed. We know that the high was formed during the past 5 days, right? You want to be somewhere near that low price so that you still have more opportunity for upside, right? But you don't have to be directly by the low, but you want to be close to it somewhere. So here on the intraday, once again, we see that the high was made. We're going across. We see that not only did it come below the 200 SMA, it traded below there, tried going back above and staying above the 200 SMA before collapsing during the lunch hour, right? So we see lunch hour, usually a price can pull back after it could not hold its price, right? It tested resistance a couple of times and it pulled back. And so it's been trading below this 200 SMA price. So now that we come to current time, well, this 10:54 time, we see that the price is trying to come back to 200 SMA price. It's not oversold yet, right? So we would want to wait for it to like bounce first and foremost, like, okay, will it bounce or will it break all the way through? Because if it breaks all the way through, meaning that it breaks all the way through from being oversold or to be oversold, then this price can also come below the 200 SMA price on the intraday chart. And if it does that, then the opportunity for this stock to trade below the 200 SMA is going to remain there throughout the rest of the day. Because that's what tends to happen. You know, if it's trading below, like if we go to the day before, if it's trading below the 200 SMA price, like it's doing right here, when the market opens, the chances of it coming above the 200 SMA price is there. But the sustainability of it holding that price, got to remember, it's overbought. So now that it's spiked up here and it's overbought, you know, you don't want to get caught in the holding and hoping here. It's overbought. We know that the price has to come down. So that's what happened here on this day. It's overbought. The price has to come down. And that's what it's doing. It's coming down. The RSI is being tested to see if it's oversold. And then the MACD is coming below the X line. So we also know that, okay, it's coming below it right now. Maybe it's heading into bearish territory. But we also know, even though that it came down to the RSI, that the price, the actual share price, is being held above the 200 SMA price. So it still hasn't come down at all to the 200 SMA. It's just testing it. So now that we see that this green candlestick is starting to form here, we start looking like, okay, well, is that support? Then you start looking back in the past 5 days, where else is support held? Pre-market support was held right here around $60.70, 75 cents. Remember what I said last week about that 75-cent area? All right, once you're around 75 cents, that's a, that's a good buy or a good buy price for the next dollar up. We see that was held here, right? So here, that's 3 places now. The 4th place is right around here, where this was a price where there was some agreement that the price can either go up or go down, and it went down. And then right around here where the price tried to test, but it didn't come all the way down. Just kind of came near to, but it was still near there, around $60.70 or so. So now that we've seen on this intraday chart, we're looking for a price, we're looking to get in, and we're like, okay, well, I like what it looked like on the daily chart. The daily chart showed long-term that there's possible upside. But on this hour, we're seeing that there was some pullback, and now there's a bounce off from that pullback for some upside. Would you still buy this stock at all? Would anybody buy this?
Well, for me, NIO is one of those stocks that are very popular. I don't normally buy those stocks, so I wouldn't buy it. It doesn't matter how it looks. I don't buy it.
So we have one against NIO because of popularity, right? And
Yeah.
I agree with you. Sometimes when people are greedy because they're looking at this popular stock, then they say, okay, well, I'm going to refrain and not buy it. Anybody else? What does anyone else have to say about it? Don't be afraid. This is learning time. This is like the practice round. So it doesn't matter if you're right or wrong. It's just whether you're able to see the patterns.
I would, I would say no. I would like to see it start trending in the up, the other way before stepping in.
I'm with you. So that's 2 no's. And I agree with both of y'all. you know, on that, especially with that hour candlestick, once that hour candlestick is red, even though it's trading above the 5 EMA price, I wanted to see it hold a certain price. I want to see it hold $60.75 first and foremost before I even thinking about putting my money in it. Because like Fitz said, yeah, it looks good, but the popularity around it might attract a whole bunch of short sellers.
Yeah, and I think the market maker, they manipulate it when they know that it's so popular because a lot of people jump in and then they just, you know, use the algorithm on it to cause it to lose your money. It start going up, and as soon as you jump in, it right back down because
So
it, you know, it doesn't have great fundamentals yet. So I think that's what they do. They manipulate these stocks a whole lot. I didn't know that those are the start and millennium love.
So I would wait if I were to buy this stock because, you know, one, more than likely I would not be buying the option contract because the implied volatility is very high. So more than likely, if I were to buy this, I would have bought the shares. But two, on top of that, because of that whole market manipulation that Fitz was mentioning, I would want to wait for the hour candlestick to actually be some type of green, right? Because once we know that the price action starts turning green, that means that there's some buyers there. Yes, I know that the TTM squeeze is showing that there's green there. I know that the RSI is over 50, and I know that the MACD is starting to tread towards the zero line. But this is where knowing the float size of a stock really matters, right? Because this float size is in the billions. It's like Johnson and Johnson or Disney, right? So there's going to be a lot of price back and forth, back and forth, back and forth. And oftentimes, if it's red on this hour starting, then the next hour is just going to pull back too, and it could possibly come back to this 20 SMA price. So even though it looks enticing here, you would still want to wait, and that's why I suggest always breaking down the time frames. What does it say on the 4 hour? What does it say on the 1 hour? What does it say on the 2 minute? Then you go back to the daily, and then you start to think, okay, well, is this something I would like to buy? I want to see it, like I said, hold $60.75. If it could do that, then and it starts trading towards $60 and maybe 90 cents, then I might start thinking about getting in. But right now, it's getting there, trying at least. You know, and you have to start thinking about. I think during this time, like Fitz said, the fundamentals were not the best. Even though that they were producing a lot of cars. I believe they were doing a lot of manufacturing of cars around this time. Um, but that was during this time. Um, so did we come to a consensus? Like this is not something that we would want to buy?
Hmm.
All right. We can go to the next time frame. Next time frame. We'll go to instead of 11:04. Let's go to 11:15. All right. Let's see if it held that $60.75. Okay, it says $60.79 still. That's what it's saying right here. So I'm still not convinced. I would need more. All right. So this would be something that I probably would have just moved on and went on to something else and called it a day. Like look for something that actually shows more upside. Now, mind you, like if we look at the TTM squeeze, it shows it could squeeze up higher, right? The red dots right here showing that um, that it did squeeze before to go up higher. That's how it made its new high, and it's kind of doing the same thing here. But right now, it's still around that $60.75. hold a good holding price, but it's still showing a lot of weakness too with the selling pressure. So if you're trying to avoid any downside risk, I would, even though it's red on the x-axis, I would wait for like one of these histograms to really show itself on the upside. Don't wait for it to be yellow. You know, wait for it not just to be yellow, but at least a little bit of that cyan color. Because it has it here. It's just that the price action is kind of wonky. So that $60.79 or 75 cents might not be held. Let's go to 11:30. Because at 12, I do not buy anything. I tend to leave stuff alone. So this should probably be at like $61 maybe, and then pull back. Oh no, still at $60.80, 70, 69, 65. $60.65. Ooh, I lied. $59.95. So good job, Fitz. Good job, Leon. Y'all identified why not to buy this stock. You know, it was right there. It didn't hold the supported price of $6.75, and it kept on going down lower. Are there any questions about that? Does anybody have any questions about why Leon and Fitz was like, no, let's not buy this at all? But let's try another stock. Does anyone have another stock that they're interested in, that they want to check out?
LBTYA.
L,
B,
B as in boy?
yeah, TYA.
EYA?
No, T as in Tom. LBTYA. YA.
Yeah, my laptop is lagging. I think it's all that data. Liberty Global. So this is still back in February. You want to look at it present day?
Yeah.
As it stops with all that data. There we go. See what it looks like long term. All right, coming up the earnings on May 5th. That's on Wednesday. Holding support. Oops. Let's zoom out a little bit. It's right here around resistance at the $26.78. That passed. Let's draw a line. All right, so this part is always good. Oh, two things. First and foremost, when you're looking at a stock, any stock, whatever it is, the night before, design your plan then. Don't choose the market open or an hour before the open to try to create a plan. That's not going to help. There's going to be too much moving around. Where did the line go? What happened? There's going to be too much going on. Why didn't I create my line? That's crazy. All right,
I'm
whatever.
looking on it from the weekly.
All right, I'm going to join you. Oh, that's probably why I put 9 there. So yeah, always construct your plan the night before, and also have a watch list of stocks that pulled back. Kind of like what Leon was saying at the very beginning. When you have those stocks that do pull back, that gives you a better buying opportunity. When you have a better buying opportunity, you can definitely get in at lower prices. So if you have a watch list of the stocks that you like that did pull back to give you a better entry opportunity, use that to your advantage. Because we all know the stock, after it makes an exponential move on the upside, it's going to want to pull back at some point. If not the next day, then the day after that. That's what they do. They was strong movement up and then strong movement down. So Liberty Global PLC. So what attracted you to this, Leon? Fitz?
From the weekly.
Where my weekly candlestick go? I had weekly on here. Where did it go? Sorry about that. Give me 1 second. All right. Yes, on the weekly chart. Can everyone see this? So, so go ahead, Fitz. What's up with Liberty Global? They sound like a financial company. Fitz? Did we lose Fitz?
I'm on mute. I was on mute.
I
Sorry.
was like, what happened?
Yeah, they gave it a price target of 31. And it's on the TTM squeeze, as long as the volume at the bottom there, you notice that there's some buying coming in right there. Yeah, right there.
Mhm.
And the RSI pointing up there. And we get a nice green candle at the end there. Just about to cross over the 200 right here.
Mm-hmm.
If we can close above the 200, then that's it.
I agree. I like the moving averages, how they're coming together, especially over the 200 SMA. That gives it a nice switch in direction. Coming out with earnings on Wednesday, so that can probably even give it a stronger boost. Like you said, there was good volume, good buying volume on last week. It ended the day on Friday. There's down what is it, 0.8%. So that's not bad. It's pretty.
22 cents.
That's not bad at all.
Comparing to how the day went.
Say that again. Leon has a
When
question.
was the oh.
No, I have no question.
Oh,
I raised my hand a while ago. I'm sorry.
Oh, no, how come?
Thank
I don't know
you.
why.
Let me lower my hand.
No, it's all good. Did we answer your question when you did raise your hand?
Oh, yes. Thank you.
Very good.
Thank you very much.
Sorry about that.
So I'm looking at the momentum. The momentum is above 0. This TTM squeeze is above the 0 line and teal color, and it's just it went over the 200 moving average and it came back down. So if we can get a close above it, that would be very good.
Yeah, this actually looks like a really good chart, especially when it's trading above the 5 EMA on the daily chart. And we saw what it looked like on the weekly chart, where all the moving averages were coming across. right here. Actually, remove these lines real quick. Remove that. So you can kind of see the moving averages a little bit more clearly here on the weekly chart. So I wouldn't be surprised if next week it did have some upside. On the 4-hour time frame, I like the fact that it like, even though it hit some type of resistance because the previous high looks like a pre-market high or after hours high at $27, right? So we know that 27.63 is the previous high. And what happened is that here it started to curl, right? It started to curl at 27.20. And when I say curl, meaning that it tested previous resistance, but as it's testing previous resistance, there's buying at that resistance line, but the buying is not strong enough to break. So it causes the price to curl. So it curled here. So it was kind of doing the same thing, like right around here, where it was like trying to go up, but at the same time, it didn't. And then it finally did when the market closed. But if it didn't happen when the market closed, it was going to continue to curl because it was finding this price right here, this resistance right here at the $27 area. So that was just one indication that, you know, if you're looking at a chart for a stock that you're looking to buy and you're starting to see the price starting to curl, you know, maybe you do not buy there. You just wait for that curl to happen and then see where it goes from there. But as far as this one, you know, if for some odd reason pre-market pulls it back, you know, I would hope that will pull it back for you before earnings, so that when earnings does come, it does spike up higher. I don't know if that's going to be true or not. Maybe it doesn't do that, and it only goes higher on Monday and Tuesday before they release earnings on Wednesday. But once that new high is made, that's for sure. Like you know, maybe it might go up to $28 or has some more news behind it to cause it to go up. You said that there was an analyst upgrade, right?
Yes.
It goes from 31.50 to 26, from $26 to 31.50. So maybe it does go up. Maybe it does go up there, and it's, you know, they maintain the buy rating.
Yeah. The next thing is that whenever you're going into earnings, it's volatility time. So don't buy an option when the volatility is. I always think about the when you're buying the option, because what you want is volatility to rise. So if you buy an option with volatility is up, the only place it can go is down. So you have to try to catch it before the volatility move up. So the
Agreed.
stock don't have to move up a whole lot because there's an event coming, then it causes the volatility to rise, and you can make some money right there.
Agreed. Agreed. You know, particularly, you know, I'm not seeing a really good spot of where I would buy an option contract on this one. I think it's pretty much too late. But that's me. I would think that's too late. But it did make a new high intraday in the past 5 days. And that was pre-market? Was that pre? Yeah, no, that was when the market opened, sorry. So when the market opened, made a new high, and this traded around and somewhat above the 200 SMA before it finally came below the 200 SMA price. So,
but you must also remember that for a few days the market went down, you know, so it's not really just it alone. When the entire market go down, it bring down everything.
correct.
It doesn't matter how strong the stock is. You can look at those stocks that hit the earnings out of the park. Look what happened to them. Look at Facebook.
Right. Apple.
Look at Apple.
AMD.
Is that what happened? Yeah. All of them beat earnings, and big too. And look what happened.
Right.
The only one that hold up was Google. I think maybe Amazon.
I think Amazon, yeah, Amazon too.
Yeah.
Amazon, maybe Shopify. I think.
Yeah. But so it was a week when you see from the 10-year he'll go up, everybody gonna go down.
Well, one of the main reasons why I always mention that where the high is, because I
Mhm.
want to know when it's going to trade below the 200 SMA price.
Yeah.
Once the high is made and trades below the SMA price, the 200 SMA price, then I know that it has an opportunity to start going back up towards the 200 SMA price. So
Mhm.
maybe on Monday, it trades below the 200 SMA price for like the first 30 minutes. And then for the rest of the day, it starts trading at least with or above the 200 SMA price intraday.
Mhm.
And then going into Tuesday to make a new high. And then once it makes a new high on Tuesday, it comes out with earnings on Wednesday and pull back down. I don't know, because that's just a scenario that I'm creating in my
Yeah.
head.
Yeah.
At least having the idea of like what it could possibly do based on where it is in price action, or at least high and low in the past 5 days. Um, but I do like the chart itself. I do like the way that it's moving. Looks like if it comes out with some good earnings, then it might even have some sustainability.
I know this oil is up. Oil is up for tomorrow. It's $67 per barrel, and the futures are up too.
I think we kind of expect oil to go up a little bit, right? Because it's heading into the summertime. There's
Yeah.
going to be some people that are driving, taking cruise lines, taking airlines. So I wouldn't be surprised that oil starts going up right now. It's just about where the oil is going to, and what sectors in energy is turning more cleaner in energy versus using old petroleum.
Yeah.